If you're on Social Security, I have great news. President Trump has a plan to eliminate taxes on Social Security. This is a big deal. This has been decades in the making, and now it looks like it's on the path to being passed. So let's talk about it. So, this is President Trump's proposal. It's going to cost $50 billion to implement, and this is his gift to American seniors, and it's being called the retirement revolution because it's going to eliminate taxes on Social Security benefits. Why is this important? Well, during the campaign, President Trump mentioned that he wants to eliminate taxes on Social Security. There were many campaign stops where he said no tax on Social Security. And as you can see in this image, it is one of the prominent images that he showed during the campaign, that he wanted to eliminate taxes on Social Security and bring some relief to seniors. So I am going to dig deep and give you what's going to happen now that this is in motion, and most importantly, how does this affect you? So if you're new to this channel, hit the subscribe button, hit the like button, because all we do is bring you the latest news and updates about Social Security, Medicare, Medicaid, food stamps, and any personal finance news in and out of Congress that is going to affect your personal finances. So let's talk about this. So should Social Security benefits be taxed? Well, the debate over Social Security taxation isn't just about numbers. It's about the retirement security of millions of Americans. And today we're talking about $50 billion in annual tax revenue that affects nearly every retiree in the country. This topic has become necessarily urgent as proposals to eliminate the tax by President Trump has gained traction, with simultaneous Social Security system facing funding shortages. So you have President Trump determined to eliminate taxes on Social Security, and then you have the reality of the Social Security trust fund situation where that is also in crisis. So I'm going to explain what the tension is and what should you expect. But $50 billion in current tax revenue from benefits that are taxed for Social Security beneficiaries, and it contributes about 4% to the Social Security fund. So whether you are already retired or approaching retirement or just starting your career, understanding this proposal is going to change your financial future. And by the end of this video, you understand exactly how Social Security taxation works, what changes are being proposed by President Trump, and most importantly, how this could affect your retirement. So here is President Trump in his own words. During the campaign, he talked a lot about eliminating taxes on Social Security. He says in one quote, the recent statement, seniors should not pay taxes on Social Security, and they won't, this ignited a debate. And he said this isn't a campaign promise. It represents a fundamental shift in how we think about retirement income taxation. And then he says, while previous administrations have modified Social Security taxation, this will be the first complete elimination of these taxes since they were introduced in 1983. And then I showed you an image where he posted on Instagram, I believe, that he is going to eliminate taxes because he says seniors should not pay tax on Social Security. So the president has been very clear about this. And there is a lot of movement in Congress. On the right-hand side, I'm showing you an image from US News that says Trump proposed eliminating Social Security taxes. Here is the bill that could make it happen. So there is motion in Congress to make it happen. Now that the Republicans have the House and the Senate, it looks more likely that this will be pushed through. And then on the Democratic side, Representative Angie Craig announces new legislation to eliminate federal taxes on Social Security benefits, but it goes further because her proposal also addresses the insolvency issue about Social Security. Because if you are paying attention, the Social Security Trust Fund is going to run out of money in 10 years, and it's going to cause an automatic 10% cuts in 20% cut in Social Security benefit. That's going to be automatic. If Congress does not do anything between now and 10 years to increase the solvency issue of Social Security, then what's going to happen is that once that hit, there's going to be automatic 10%, 20% cut in Social Security benefits. We don't want that. So this legislation by Representative Angie Craig not only eliminates taxes on Social Security, but it also addresses the solvency issue. But let's get back to Trump. He's proposing a $50 billion Social Security shakeup. Now let's talk about how the current system works. So the revenue impact. The current taxation on Social Security benefit brings in 50 billion annually. That may be a drop in the market for the federal government, but it's a lot of money. This amount covers benefit for over 3 million retirees, average benefits of 1,500 a month. Projections show that revenue tripling to 150 billion by 2034. So what this means is that currently Social Security taxes bring in 50 billion a year. Over the next few years, that is going to rise to 150 billion. So it means that because more baby boomers are retiring and are being paid Social Security benefits, taxes on Social Security benefit is going to bring more revenue to the government. So you can see why this is a very controversial thing to do. In 1983, here's the kicker, only 10% of beneficiaries were paying Social Security taxes. Now it is 40% of Social Security recipients. And the tax threshold has been frozen at 25,000 for individuals and 32,000 for couples for 4 decades. So even though the tax threshold hasn't increased, 40% of Social Security recipients are paying this from 10% in 1983. And inflation is pushing more middle class retirees into paying taxes on their benefits each year. That is why this is such a big crisis, because more and more people are being caught up in this Social Security taxation net. But then there's a looming crisis. Social Security Trust Fund is projected to be depleted by 2035. And when it's depleted, the system will only pay 77% of promised benefit from ongoing payroll taxes. Now let's look at some historical precedent. In 1983, taxation was introduced and was only affecting the wealthy. So initially, when they introduced the Social Security tax system, it was supposed to be taxing the wealthy. And now that is not what has happened. It has caught a lot of middle class and low income people in the net. And then in 1993, it was expanded to 85% taxation. And then they froze the threshold on the increase, but it's considered a stealth tax. So I'm going to explain what that means. So there's a hidden tax on Social Security. So modern retirees are facing a reality where the average retired person, 50,000 in Social Security benefits and 30,000 from other sources, and you're going to be paying taxes. And annual taxes on benefits alone could be about 3,000 to 4,000 for some people. And that's a significant burden on fixed income retirees who already are stressed by inflation and the high cost of living. So President Trump's proposal to eliminate taxes on Social Security not only restores money to retirees, but it also goes to the original intent of the Social Security tax system, where in 1983, it was targeted at the wealthy and only 10% of retirees were paying it. And now 40% are now paying the tax on Social Security. So even though the thresholds have been frozen at 32,000 for married people and 25,000 for singles since 1983, it's still a burden on a lot of people. Now, 85% tax surprise. Up to 85% of Social Security benefits can be subject to federal income tax. And this is shocking to many who pay taxes on their contribution during their working years. And the rationale is that the average retiree only contributes 15% of lifetime benefits through payroll taxes. But $1.2 trillion is already collected through payroll taxes, and 1.4 trillion in benefits. So here's where the crisis comes in. Currently, if you understand the way the Social Security system works, is payroll taxes coming in and other forms of taxation into the Social Security system, and then benefits are being paid to retirees. Well, ideally, the systems to balance each other out. The money coming in and the money going out. But that's not what is happening, because currently 1.2 trillion is coming in through taxes, and then 1.4 trillion is being taken out. So there's a current 200 billion shortfall that is covered by the trust fund reserves. And that trust fund reserve is what is going to be depleted by 2035, because there is this $200 billion gap that every year is being funded through the reserve. And so if nothing is done to shore up the reserve, then in 2033, then there's going to be automatic at least 20% cut. So maybe it explains to you why we have this Social Security trust fund and you're hearing Social Security is in crisis is because 1.2 trillion is coming in and 1.4 trillion is being taken out. Now, let's talk about the Social Security tax machine. Employees versus employers. If you know how the system works, it's a 12.4% tax on Social Security split between employees and employers. However, retirees with $50,000 in annual Social Security benefits could pay up to $7,500 in federal taxes. That is a very high rate. On top of that, there are 13 states that also tax Social Security. So if you live in one of those states where you are paying federal taxes on your Social Security benefits and then you're paying state taxes on your Social Security benefits, then you can see how a lot of people are bent out of shape about this and why President Trump's proposal to eliminate taxes on Social Security is so popular, because some retirees are paying over $10,000 in annual taxes on Social Security benefits. So if you like what you're hearing, hit the like button, hit the subscribe button. I have more to come on this and explain to you what the timeline is and when I think this bill is going to be passed to eliminate taxes on Social Security benefits. So let's talk about the tax structure. There are two-tier approaches. Up to 50% are taxed at the lower levels, and then up to 85% at the higher level. Now, this is supposed to be a progressive tax structure, but it doesn't really matter. It's the fact that 40% of retirees are now paying Social Security taxes versus previously when it got started in 1983, where only 10% and proportionately the rich were paying this tax. So who pays the price? Well, low-income families. There's no federal taxes on benefits for income below $25,000. That's Social Security benefits. And for married people, it's $32,000. The threshold hasn't changed since 1983. So what was once low income now captures many middle-class retirees. So think about it. If they've frozen the threshold at 25,000, 25,000 for individuals and 32,000 for couples, it's been frozen, which is the problem. Because if you think about it, in 1983, $25,000 meant different than it meant today. What you can buy in 1983 with $25,000 is different than what $25,000 can buy today for an individual and $32,000 for a couple. So what ended up happening was that when they passed the Social Security tax law in 1983, during the Reagan administration, only 10% of retirees were eligible, and it was usually mostly the rich. Now, because it has been frozen and the cap has not kept up with inflation, what has happened is that more low-income and middle-income people have been pulled into it. And so it has caught more people. So the percentage has gone from 10% in 1983 to a whopping 40% because the cap has been frozen since 1983. So more and more people are being caught up in it. And so 50% of benefits are taxable for middle class people from 25 to 34,000, and then 32 to 44 for married people. But again, it's been frozen, and so more people get caught up in it. And then for higher income earners, 85% of benefits are taxable above 34,000 and 44 for married people, and it affects many who don't consider themselves wealthy. For example, a retired couple with $50,000 in Social Security and $40,000 in pension could face up to $5,000 in additional taxes on benefits. So even though the upper limit of the Social Security tax threshold is aimed at the wealthy, what was considered wealthy in 1983 is now considered probably lower class or middle class now. And so you have more people who are being impacted by these taxes because of the way it's been designed. And then there's the marriage penalty on top of that. The marriage threshold is 32,000, far less than the double for single, which is 25,000. So why isn't married threshold 50,000? If a single person has a threshold limit of 25,000, why is married couple 32? And that's why people are calling that the marriage penalty, because it pays, according to the Social Security system, to be single and pay Social Security taxes than to be married, because when the two of you are filing together, instead of it being 50,000 threshold, it's only 32. So a lot of married couples who are both receiving Social Security benefits are being caught up in the Social Security tax system. And so two single retirees living together, each earning 25,000 or less, could avoid Social Security taxes, where a married couple living together making 32,000 or more then get caught up in the Social Security tax system. So as you can see, there's a lot of things going on that is very unfair, or people consider unfair or unfavorable to them, and that is why this needs to be addressed. Now, let's talk about the lifetime benefit reality. The average middle-class worker retiring today will receive $1 million in lifetime benefits from Social Security, based on a typical $2,000 a month monthly benefit over 25 to 30 years, plus the cost of living adjustment. It shocks many people, but this is the lifetime benefit on average. Now, your contribution, a typical worker and an employer combined pay around $300,000 over 35 years. An employee's actual contribution through payroll taxes is $150,000 and 15% of lifetime benefits. So these are just the raw numbers. So your employer's $150,000 contribution is never taxed as income. It's a business expense. It grows tax-free until distributed. So basically, what's happening is that the employer benefits, but when you get your Social Security tax and you get to a certain threshold, then you get taxed. And so people are wondering, okay, if the employer takes that as an expense, then why are individuals taxed at retirement if they get a certain threshold when the employer gets it as an expense, but then individuals are taxed at retirement? So the remaining 70% of benefits, approximately $700,000 from the system, returns to the, so basically your income, what you contributed, $300,000, grows into $1 million in lifetime benefits that each person gets. So that is how the system works, and that is how the math works. So let's follow the money. Taxes on Social Security benefits go to generate it goes to the general federal fund revenue, not back to the Social Security Trust Fund. That is an important distinction. So I'm going to repeat that again. Taxes on Social Security benefits go to the general federal revenue fund, not to the Social Security Trust Fund. Estimated $50 billion collected annually doesn't directly improve the Social Security solvency. So the taxes on Social Security to begin with does not really change the game because it's only $50 billion a year. So monthly payroll checks are funded by current workers, and it's a ratio of 2.8 worker per current beneficiary. It's down from 3.4 in 2000. It's projected to drop to 2.3 worker per beneficiary by 2035. So let me paint the picture for you. So first of all, remember I told you that 1.2 trillion is collected in payroll taxes into the Social Security system, and 1.4 trillion is being taken out. And so there's a 200 billion gap. How did that happen? Well, the reason is that currently there is 2.8 worker that is funding benefits for every retiree, and that is down from 3.4 worker to a retiree in 2000. And that ratio is supposed to get worse, and it's supposed to drop to 2.3 worker per beneficiary by 2035. So I'm painting this picture to you because we're headed for a crisis if this does not change. That's why, yes, President Trump wants to eliminate taxes on Social Security. That is only a $50 billion price tag. And some of you may say, well, that is worth it. That is no money. And it wasn't originally intended to affect everybody as it's doing right now. It was intended to affect 10% of the retirees. It's now affecting 40%. So eliminating taxes on Social Security is going to benefit a lot of people. I agree. However, there is a crisis, and that crisis gets worse by eliminating taxes on Social Security. So Congress has to do something. So the Social Security Administration manages payment for over 70 million Americans 1.4 trillion is distributed annually. It exceeds GDP of most countries. It requires a coordination between multiple federal agencies and a complex systems. Less than 1% of the budget spent on administrative costs, so very little is being spent on administration. For every 100 in benefits, only about 60 cents goes to operating expenses. So that's really tiny. Think about that. So like the Social Security Administration is not eating up the money. Only 60 cents for every $100 collected goes to administrating the thing. One of the biggest thing is that Social Security is actually one of the most efficient government programs in existence because there's not a lot of administrative cost to it. So where is the money going? Now that's what I want to talk about. The looming crisis. The Social Security Trust Fund is projected to be depleted by 2035. Post depletion, income payrolls will be able to cover only 77% of promised benefits, which means that when we get to 2035 and nothing is done by Congress to fix the trust fund issues, then automatically everybody's going to get 77% of promised benefits. It's caused primarily by demographic changes and not mismanagement. As I said, we went from 3.4 person working covering each retiree, and we're now at 2.8 person covering each retiree, and we're about to drop to 2.3 covering each retirees by 2035. So there is a demographic angle where more people are retiring than are paying into the system. And so Congress has to do something about this. Now, I hear some of you in the comments saying the crisis is wasteful spending on government, illegals, and bureaucracy. More pay into the system die before collecting benefits. I agree. I mean, government by itself, there's a lot of efficiency that could be found. There's a lot of wasteful spending that goes on both sides. And so, yes, it should be looked into. But we cannot deny the fact that there's also a demographic angle to this, which is that more people are being paid Social Security benefits than are taken out of the system. So the worker to benefit sharing ratio is declining dramatically. 3.4 workers per beneficiary in 2000 to 2.8 today, and is projected to be 2.3 by 2035. Fewer workers are contributing payroll taxes to support each retiree. That is a fact. Everything else you think is happening may be true. Everything else you think is happening with the Social Security Trust Fund, why Social Security is running out of money, all the reasons you are thinking of may be valid. But there's no denying that fewer workers are contributing to payroll taxes to support each retiree. That's a fact. We can't deny that. And that by itself also creates a crisis. And then you have Medicare costs, which is rising faster than inflation. And then on top of that, there's Social Security COLA, which also gets taken out of the system. So many retirees see Social Security rates consumed by higher Medicare premiums, which is a real problem right now where people get Social Security increase. The tiny COLA that you receive this year, the 2.5%, gets eaten up by Medicare premiums because that is also rising at an alarming rate. And so it puts additional burden on seniors. Now, there are a couple of ideas out there, and I want your opinion on this. There are about 5 proposals to fix Social Security, and I am saying that President Trump is proposing to eliminate taxes on Social Security. That is in motion, and I think is going to happen unless the Republicans who control the entire government get cold feet about it. President Trump is determined to pass the law to eliminate taxes on Social Security. And as I mentioned, it's only a $50 billion price tag. The Social Security Fairness Act that was recently passed cost $190 billion. So eliminating taxes on Social Security is a no-brainer. But it's going to cost money, and it's going to make the Social Security Trust Fund problems worse because $50 billion that was coming into the system from Social Security taxes, now it's not going to come in anymore. It's going to be gone because the Social Security taxes will be eliminated. But here are 5 proposals to fix Social Security, and I want your opinion on that. I want you to type in the comments what you think. Number 1 is to raise the retirement age. Current Republican proposals suggest raising the retirement age from 67 to 69. And President Reagan obviously raised it before. The financial impact is that it will address 20 to 30% of the projected shortfall. And critics point out that many people in the physical labor, people who are doing physical labor jobs, cannot wait that long into 69 before retiring because they may not even get their benefits. And the proposal would disproportionately affect lower income workers who often have shorter life expectancies and more physically demanding jobs. So proposal number one is to raise the retirement age from 67 to 69, and is going to solve 20 to 30% of the Social Security Trust Fund issues. Proposal number two is to slow down COLA. Now, I know this is probably going to upset a lot of people, but that is on the table, is to slow down the rate at which the cost of living adjustment, which is already low. It was 2.5% this year. Now they want to even reduce it further because even though the COLA is low, it still comes out of the Social Security Trust Fund. And so they want to eliminate it or put it as low as 0.5% or reduce it by 0.5%. The impact is that if they do this, if they reduce COLA even further, is going to solve 29% of the long-term problems of the Social Security Trust Fund. But unlike other proposals, this will affect all beneficiaries. So eliminating Social Security COLA is definitely going to be very, very controversial because unlike everything else I'm talking about, this is one of the proposals that is actually very unpopular. The impact of reduced COLA as compound over time, potentially significantly reducing the purchasing power of Social Security beneficiaries. Proposal number three is payroll tax changes. The existing split between 6.2% employee and 6.2% employer means that Social Security taxes is 12.4%. There is a proposal to increase it to 6.5% from 6.2%. The solution has strong backing from both parties. 85% of Republicans support it, 88% of Democrats support it, so it's politically viable. This change could affect all wage earners, spreading the burden across the entire workforce rather than targeting a specific group. So let me know what you think. Proposal number four is the income cap. Now, this is where I need to explain to you what happened before. Previously, there were two-tier systems for taxing Social Security. Up to 100 and this year's 176,000. If you make up to 176,000, you're going to pay Social Security taxes. There was also another cap previously of 400,000 and above. Well, Congress eliminated the 400,000 and above. So let's say somebody is making $500,000. In the previous system, they would have paid taxes on the first 176,000, and then they will pay taxes on anything above 400. So they'll pay tax on an additional 100,000. So this is what that looks like. So somebody making $500,000 currently will pay only $10,000 based on last year's threshold. In the old system, they would have paid $31,000. But somebody that is making $50,000 will pay $3,000 in the current system and pay $3,000 in the old system. So basically, if you make more, you don't pay Social Security taxes after a certain limit. And so that was one of the reasons that started causing the shortfall in the system, because Congress eliminated that second tier. If they bring back the second tier alone, that is going to bring in more money into the system, because I told you there's a $200 billion shortfall between the 1.4 trillion that is being taken out and the 1.2 trillion that's coming in. So that is proposal number four. Let me know what you think. And then last, means testing. This is means testing will evaluate income levels to determine beneficiary eligibility, potentially reducing benefits for high-income retirees. The impact: the approach could reduce the program's shortfall by 11%, providing a significant but not complete solution. Public support. Polling shows high approval from both Republicans, 90%, and Democrats, 94%, likely due to the targeted nature of this particular solution. And the proposal will primarily affect the top 20% of income earners, preserving full benefits for majority of recipients. So this is proposal number 5, means testing of Social Security benefits. So let me know what you think. Do you think of all the 5, number 5 is means testing, number 4 is the income cap removal, number 3 is payroll tax changes to increase it to 6.5, number 2 is the COLA, slowing down COLA, which is already low, and number 1 is raising the retirement age. Let me know in the comments which one you think is the best solution for fixing Social Security. So let's talk about the future. I told you President Trump wants to eliminate taxes on Social Security, and eliminating benefit taxation could increase annual take-home pay for retirees by $2,000 to $7,500. So if you're currently paying payroll tax, Social Security taxes, you could really get some money back. Minimum $2,000, maximum about $7,500. And obviously it depends on your total income at the time of filing. Now, if you are planning for the future, if you're yet to retire, those retiring in the next 5 to 10 years should prepare for current tax structure, consider, other options to be able to maximize your taxation. And if you're young, there are more things to consider, because when it's 2035, if Congress does not do anything, Social Security are going to be reduced by 77. It means that you're going to get 77% of what you're eligible for. So if you're young, workers under 40, and you're thinking about retirement, know that there's a crisis coming. 2035, if Congress does not fix the Social Security Trust Fund shortfall, benefits are going to be limited to 77% of what you're eligible for. And if you're self-employed, then there's other considerations for you to think about. So I really wanted to bring you this because I think that Congress needs to think through this. And I think the president's plan is likely to pass because the Republicans have the House and the Senate, and there's broad support among seniors for eliminating taxes on Social Security. So let's review everything that I talked about. So the president wants to reduce taxes on Social Security or eliminate it. It's going to cost $50 billion annually, but it's going to also affect the trust fund depletion, which is supposed to happen in 2035. But originally, Social Security taxes was meant to cover the wealthy, or at least the upper income population, and it was only paid by 10% of retirees in 1983. Currently, it's paid by 40% of retirees because the income threshold has been frozen for 4 decades at $25,000 for individuals and $32,000 for married people. So if you're an individual, 2 individuals living in the same house and getting Social Security, you're paying less taxes than 2 individuals who are married living in the same household, because the threshold is $30,000, $32,000 for married, and $25,000 for individuals. So my point is that there's a clear urgent need to prevent a 23% benefits cut by 2035, and political changes remain. In spite of what the president wants to do, there are other challenges that Social Security has to address that is urgent and also need to be put into any reform package that touches Social Security. That is my opinion. So what do you think of the 5 choices that I gave you on how to fix Social Security? Let me know which one you would pick. And what do you think about the president's plan to eliminate taxes on Social Security? Let me know in the comments. And I plan to do a live almost every day going forward. So stay tuned for my topic tomorrow. And I'll probably bring you more details about this plan to eliminate taxes on Social Security. So I really appreciate you hanging with me today and watching this live. So until tomorrow, thank you for watching.